we will be seeing what is a free cash flow. Okay, so free cash flow is the amount of cash that remains after deducting funds a company must commit to continue operating at its plan level. Okay, now such commitment must cover your current as well as continuing operations and the expenses related to that, like interest, income tax, okay, the dividend or and the net capital expenditure. Okay, so if the free cash flow is positive, it means that the company has met all its planned commitments and the cash is available to reduce the debt or expand the debt. Okay, a negative free cash flow means that the company will have to sell its investments or borrow the money or issue stock in short term to continue at its planned level. Okay, so now we'll see how to calculate a free cash flow. Okay, so free cash flow, actually free cash flow, there are three concepts: free cash flow, okay, to the firm, okay, it's also known as FCFF, free cash flow to the firm. Okay, so free cash flow to the firm, there are two ways. See, if you have operating cash flow, the formula for calculating free cash flow is operating cash flow, okay, minus capital expenditure. Okay, so this is how you calculate a free cash flow. Now if there is no operating cash flow, net profit is given. So how do you do it? Net profit plus your non-cash expenses, okay, plus your non-operating expenses or income. If there is an income, you have to reduce it. If there are expenses, you have to add it. Then plus or minus working capital adjustments, okay, minus your capital expenditure. Okay, now if you see this formula, this net profit plus non-cash expenses plus non-operating expenses and income plus or minus working capital adjustments, all this is nothing but formula for calculating your operating cash flow or cash flow from operations using an indirect method. Okay, so free cash flow to the firm is operating cash flow minus capital expenditure. Now free cash flow to the equity. Now firm, when you say firm, includes your free cash flow to the equity shareholders plus preference shareholders plus your borrowed funds. Okay, so borrowers also. Now when you say free cash flow to the equity, the formula will be your operating cash flow, okay, minus capital expenditure plus or minus inflows and outflows from debt. Okay, so you have to consider your inflows and outflow from your debts also to consider how much is a free cash flow to the equity. Okay, so if operating cash flow is not given, if net profit is given, again we have to calculate the cash flow using this method. That is, instead of operating cash flow, we have to write it as net profit plus non-cash expense plus non-operating expense, or you have to reduce your non-operating income plus or minus working capital adjustments. Okay, Now there is one more approach of calculating a free cash flow. Okay, third approach, free cash flow. Okay, now here what we are doing is accounting operating cash flow minus capital expenditure plus or minus inflows and outflows from debt minus your dividends paid. Okay, so here we are considering even dividends paid, as the dividend is also an important outflow. Okay, so what happens is at every general meeting or AGM, the proposed dividend is being kept in the front of shareholders. They have to approve it. Okay, and accordingly the dividends are paid. So dividends are also considered as one of the important cash outflow. Okay, so this is one more approach of calculating free cash outflow, operating cash flow minus capital expenditure plus or minus inflows or outflows from debts minus dividend paid. Okay, so this is how we calculate a free cash flow. Now I'll show you one formula or ratio related to a cash flow. Okay, ratio related to a free cash flow. Okay, so what is a ratio related to a free cash flow? It is price per share upon free cash flow per share. Okay, so now what is it? Price per share upon free cash flow per share. Okay, so price per share will show you what are the expectations of the customer, whereas free cash flow will show you actual position. Okay, so how much is the actual free cash flow which is available per share, okay, to its shareholders. Okay, so it will show you expectation versus actual. Okay, so this is also one of the important ratio while doing an analysis for a particular investment. Okay, and it is not based on your net profit or sales, okay, or some assets. It is based purely on the free cash flow per share. Okay, so this was about a free cash flow. Thank you.